No jokes today, guys. There is blood in the street, and a lot of it is mine. I'm bleeding out, guys. All right, so I'm going to talk about the recent market crash that we're experiencing. And actually, as I'm speaking, it's crashing. So I'm going to talk about what factors are at play and what I think is going to happen in the future with the crypto market and the economy as a whole. As we all know, valuations have been nosebleed in the past couple of months, actually since the March 2020 crash that we experienced. In part, a lot of this has to do with the low interest rates and the large amount of fiscal stimulus. In today's video, I'm going to discuss everything I noticed, but I'd love to hear what you guys think. Am I missing something? Do you think the market's going to head in a better direction? Let me know. Also, I'm no advisor, so please do your own research when investing in crypto and stock market in general. And if you guys like this content, please be sure to subscribe. A lot more of it's coming in the future too. The first reason for the big crash is the macroeconomic picture. While it's hard to admit, the party cannot last forever. I mean, there's so much free money, there's so much cheap money and easy money, and it's causing a lot of problems, especially with inflation. I mean, have you guys seen bacon prices lately? It's crazy. Too much cheap and easy money, it causes more inflation, and that actually weakens the US dollar as the world's reserve currency. We're expecting 3 to 4 rate hikes this year and 3 to 4 rate hikes next year. This is going to be very problematic because we have so much cheap money and so much debt. If we increase interest rates, will we be able to fulfill those obligations? I'll show you guys the whole world debt clock. It's crazy right now. Honestly, I looked at it and I'm like, are we approaching 30 trillion? What we're really starting to see right now is how fragile our markets really are. Think of it as a balloon and it's super inflated. Like putting a pin in it, it's gonna pop everything. I mean, it's not like a small balloon where a little bit of air will come out. No, this is a huge, mega hot air balloon. And once all the air comes out, a lot of people will lose a lot of money. Another thing to note too is open interest is very high. And a lot of people have been trading on leverage and this is problematic. So I think we're gonna see even further pullbacks with all this leverage getting flushed out of the system. Now guys, I'm gonna talk about the factors specific to the crypto market. So liquidation chart in the past 24 hours is crazy. We're at over $1.1 billion in liquidations in the past 24 hours. It is growing consistently. People are looking for yield, right? That's not a problem. But by taking out leverage to try to amplify your gains, that is problematic in terms of the large amount of people doing so. NFTs are also no different, guys. I mean, look at this. 25, 30, 60% plus drops in these JPEGs. Man, I would not want to be holding on to these right now. I can see it going down further because we're looking to go towards store of value. People are looking for safety and they're not searching for JPEGs. JPEGs, you can't pay your bills with a JPEG. Maybe in the future you can, but right now you can't. So most people also in the past year that got into crypto, they're trading at a loss and they may not have as much confidence and quote unquote diamond hands, right? They don't maybe see the benefits of it. They heard their friends get rich from it and now they're jumping in and they're trying to get rich from it too. And what they don't realize is this is a very volatile and young emerging market. And with that comes lots of volatility, lots of downside risk potential with upside risk potential too. But you gotta be here for the tech, because if you're not here for the tech, you're just gonna look at these numbers and you're gonna be like, man, I'm just gonna get my fixed income, my S&P 500. I don't have to worry about this crazy volatility. And guys, people are so fearful right now. And speaking of fear, the fear and greed index is actually at an all-time low. It's 13 out of 100 right now. And I don't know how far this thing can go, if it can go in the negative, but it is not looking good. And for me, I don't pay attention to this. I'm still doing my normal thing of dollar cost averaging. IDGAF. I don't care. I'm gonna keep going in, and I know I am principled with my investment strategy. All right, so a lot of you guys are probably asking, what's going on, Paul? And I'd like to hear what you guys think. I'm gonna speculate here. So the midterm elections are coming up, and currently our party cannot have a weak and depressed economy during these elections. If so, they know that they're not gonna get voted in office come the election cycle. And so what I think they're doing right now is they're artificially kind of dropping the market right now. They're kind of scaring it, spooking it a little bit. And then they're gonna come back as the saviors when midterm elections come up. That's one of my theories. Again, just speculation. Another thing is there's potential for war with Russia, and I get those allies of Russia that we may go to war with, and it just seems like there's a lot of uncertainty in the whole global world view right now, with a lot of different things for a lot of variety of factors. As we know, guys, the recent variant, it sounds like a transformer. Everyone's getting it, and the charts are through the roof. I mean, I think I have a map here and everything's all red, and I'm like, okay, like there's a lot of factors at play right now, and a lot of these are contributing to what's gonna happen. How sustained, how long will it be? That's up for debate. I did want to say, with the debt clock approaching 30 trillion and our revenues being only 4 trillion, there's a little bit of a gap there. So there's a lot of air, as I mentioned earlier, that can come out of this bubble, and I just don't know where is the floor. On the stock market, but also on Bitcoin, I think it's 30K, but I don't think we'll get lower than 20K, but I think if we go below 30K, then the next psychological barrier is 20K. All right, guys, what am I doing right now? So personally, I haven't sold a single Satoshi or crypto asset. I know you may be looking, Paul, if you would have sold here, you would have, made all this money. Well, hindsight's 2020, right? Okay, I get it. I could have made, if I bought, Bitcoin 10 years ago, I would be worth like $90 million. I'm sticking with a principled approach. This is what I'm doing personally. I'm just buying the dip. I'm dollar cost averaging. I buy, a couple $100s a day, every day. And, as it drops more, I'll increase that. But, my conviction is extremely high. In fact, I think it's inversely related to the Bitcoin Fear and Greed Index. I think it's like 13 out of 100. Give me like 130 out of 100. I'm super convicted. I'm just seeing this as a huge fire sale, honestly. Now, it's funny. I looked at some of my paper losses, and yes, I could have flown private to Hawaii. I could have bought in a really nice sports car. My blood is in the street. And just like many of you, your blood may be in the street also. In the long term, 5-10 year horizon, I don't see it staying below 50K or 60K or even where it's at now, 30K. I think I could see it potentially hitting the $100,000 to $300,000 mark at least. And because this is just my viewpoint, and I could be wrong here, but this is something I strongly believe in. I went to El Salvador firsthand. I saw the benefits of it from a remittance standpoint. I know for a fact that if you want to be strong, you gotta hodl, and you gotta hold through these things. You can't just sell every time something goes down. Anyways, that's just what I'm doing, guys. Wanted to share this video with you. I wish it was a little bit more lighthearted. I know that it's hard. It's hard seeing losses, but I just want to let you know that a lot of people are losing a lot more. I mean, these NFTs, these, altcoins, crap coins, you call them, they're really taking some big drawdowns. And the people on leverage, they're losing even more because they are getting liquidated, and then they lose all their current assets and whatever they borrowed too. So just be safe out there, guys. Trade within your means, dollar cost average, and be principled with your approach. Anyways, I really enjoyed putting this video together, guys. I hope you have a good one, but please be sure to comment, rate, subscribe if you liked it. It means a lot, and I'll see you guys in the next one.